Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is a special edition where our focus is on the Q3 earnings. The company on our radar in this edition is KPIT Technologies. The company has posted strong set of numbers. We've seen that the net profit is up over 10% at 155 odd crore rupees sequentially, and the revenue has also jumped about 5 odd percent to 1257 odd crore rupees again sequentially. EBITDA has improved from 240 crores to about 258 crores in this quarter. We've also seen the margins on a sequential basis that have expanded to 20.6% as well. Now, to discuss more insights from the quarterly earnings, what worked for the company and the outlook going forward, I'm now joined by the top management of the company. Mr. Kishor Patil joins in. He's the MD and CEO of KPIT Technologies. Welcome to Business Today Television, sir. It's good to have you with us. Strong quarterly earnings for you. Congratulations on that. Help us understand what really worked for you in this quarter first.
Yeah, I think, Sakshi, I think if you have seen KPIT's basic strategy, we are talking about same things repeatably, and we believe that this is a long-term growth phase of auto industry we are in. So basically, our clients continue to spend, and they will continue to spend, increase their year-end spend over 6-7 years. The areas in which they are spending, they are going to be the same. We are working on long-term projects, long-term their platforms, if I have to say, which are the new architecture platforms. So fundamentally, it's the engagement, deep engagement, relationship with the client. It is all long-term. So it is not about a quarter, it is ongoing basis. And what we are trying to do is bring new offerings which we can add and for these clients to be successful in their transformation. That's the only thing we are working on, and then delivering excellence quarter over quarter. I think that's what we are trying to do.
Okay. I wanted to understand from you, as far as the macro environment is concerned, a lot of your peers who still deal with the auto industry at large, both globally and domestically, are still facing some of the pressures from the client side. And, I wanted to understand your own thoughts as far as the demand scenario on the macro environment is concerned. Are things bettering off from the last 2 or 3 quarters? And by when do you see the industry coming out of this slowdown as of now?
So I think the way one has to look at it is, see, all auto industry, by the way, has shown very strong results, financial results last year. So I think there is some softness because of some of the commentary, I think, from OEMs about certain EV programs. In the sense, the sale of EV may not be as per what they had planned earlier. It is not about the slowdown, but it is more about they will take little more time. It is not about EV, whether it is not about autonomous, whether it is not about connected. It is about some timelines they have been talking about. So I personally don't, we have not seen any significant change in their behavior. Actually, there is some time here and there, but not any significant behavior about large programs. But I believe in that sense, as I mentioned to you, we are not dependent upon the number of vehicles they sell. It is more from their large vehicle program, R&D, engineering projects, long-term programs. So from that perspective, we are not seeing anything, slow down or this from that perspective. But if at all there is some softness, I guess, in some peripheral part, I can't estimate, but it may take maybe 6 months or 12 months.
Okay, 6 to 12 months and things should be okay. Tell us, geographically speaking, Europe has been good for you, but there is some...
I want to make sure that I said it correct. I am saying that we have not seen that, but if at all if you want to really ask whether when they will increase the spend, I think more importantly, they're prioritizing their spend. If I had to put it correctly, I think the people who are working on, if I had to say, some part of the technologies, which are, if I had to say, on the old programs versus the new programs, there is certainly a shift from the old programs to the new programs. That's where the change in the spend is.
Okay. When you talk about geographically, Europe has been good for you, but there has been some tapering off in the US. And of course, we are in a year which is going to be an election year, even in the US as well. How do you foresee this geography coming out of the slowdown that is facing right now?
Let me first talk about the geography you did not speak about, which is Asia. I feel a very strong growth momentum, and we believe Asia will be one of our strongest growth driver for the few years or years to come. Let me put it like this. Of course, Europe will follow the suit. It has been a strong growth for many years, and it will continue. And in US, if you ask me, I believe the core programs are not yet impacted, but I actually see there is apart from passenger car, there is also commercial vehicles, because in that sense, in terms of number of OEMs, it is relatively limited in US. But the commercial vehicles and that ecosystem is pretty strong in US. So I think they will certainly spend. They are also in a good business cycle. And PASCAR people, I think, again, going back to my basic premises, because all of these companies want to come out with a new model which are competitive in the market in the time frame of 26-27. They don't have much time to delay the programs. It may be a quarter here and quarter there. In case of engineering spend, because they will have to deliver their programs, otherwise they will lose on their future market share on the new generation vehicles.
Fair enough, sir. Sir, on a little bit on the guidance now, you also have upped your guidance from about 27 to 30% that you were expecting earlier. You're now expecting to grow at 37%. Would you be confident of meeting that? I'm asking you this because brokerage houses are thinking that perhaps you will beat that guidance by a large margin. What is your own sense?
Yeah, I mean, in the sense, we had a strong growth in Q4, Q3, and the momentum is there. So, I mean, we had always said that it will be 37% plus. That was how we had put it. We never said 37 by itself. So naturally, we expect likely to exceed it to some extent.
Okay. Your deal wins also have been good. Tell us what the pipeline really looks like for the upcoming quarters, sir.
Yeah. So I think we see good momentum. As I said, we continue to win business, and we see existing clients naturally contributing to the pipeline more significantly. Also, there are a few, if I may say, new clients. We have only select clients, so we are engaged with them. So at some point of time, they will also start contributing to the growth. So overall, we are in a good shape. Let me put it. We are in a positive environment, and we are very well positioned with our clients.
Okay. We're just a day ahead of the interim budget, and I have to ask you what your expectations are from this budget, even if it is a vote on account or an interim one. Do you expect some announcements coming in, with relating to the sector that you're in, especially EVs, and, the push that the government has already had in this space? Do you expect some more announcements to come in here?
I mean, I cannot imagine. I cannot predict what will come, but I can tell you what are the expectations. So I think from overall perspective, I believe there are 2-3 points which, as an industry, we are looking at. One is we are looking at more ease of business, both for all the ER&D tech centers there are in the India in terms of transfer pricing and some of the regulations, it will just ease out more, and I think it will really lead to a very favorable business environment. That is one area. Also on SEZ going forward, if better clarity will of course help. Third, I think, is in case of new technologies in automotive and mobility sector, we do hope. And otherwise also, I think even in other sectors, we hope that the technology which is invented locally is more incentivized than just the technology being bought and manufactured in India. So we really promote technology which is being developed or innovated in India. So these are some of the expectations. I don't know what will come tomorrow.
Okay, well, thanks a lot for sharing those expectations and all the very best to you for the upcoming quarters. And thanks for speaking to us on Business Today. Here's hoping that we can get into many more conversations going forward to understand more insights about the industry and the company at large.
Thank you. Thank you.
All right, with that, we wrap up this special conversation with the top management of KPIT Technologies. They're confident of 37% plus kind of growth coming in. And of course, not too much of a slowdown from the client side is what they are facing as of now. But in case it's the choice of the client spending increasing, that could come in 6 to 12 months ahead of now is what their thought process is. With that, we wrap up this special edition, but do stay tuned. A lot more of our earnings conversations follow up next on Business Today Television.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-risking the Future in collaboration with Business Today. Celebrate 32 years of leadership in business news with Business Today. From the groundbreaking AI cover of Sundar Pichai to PM Modi's exclusive on G20, we redefine headlines. Now our 32nd anniversary issue explores India 2029, the 5-year agenda, with industry titans sharing exclusive insights. So, just BT it for unparalleled perspectives. Business Today, 32 years of leadership, innovation, and business brilliance. Subscribe now.